My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. I'll be one of my friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, put it in context. Call me, 1-800-743-CNBC. Tweet me, @JimCramer. What a day. The market opened weak because of the coronavirus worries, then came roaring back when the World Health Organization reassured us that the outbreak's not that bad, with the Dow ultimately gaining 125 points, S&P rising 0.31%, NASDAQ advancing 0.26%. So we need to address the elephant in the room. Could we possibly, potentially, be headed for a coronavirus-induced recession if we don't get this thing under control? Now, the stock market has been saying no, but my wife, who just got back from a trip to Poland, asked me that question a few minutes after she got settled. When she's not running one of those restaurants, she works in real estate, and we were looking at a house. She was stunned. Mortgage rates are back to 3%. She asked if the disease would shut everything down, and that's why rates are so low. Stocks are signaling prosperity, at least today. That's what I look at. Bonds are signaling recession, and that's what she looks at. I told her the economy is too strong for recession, but then I hedged because I know that the gauge she looks at, mortgage rates, are priced off of treasuries, and the yield on the 10-year is now plummeted to 1.59%. That rate screams recession. The bond market's gigantic. We got to take it seriously. It may be wrong, but it's probably not that wrong. I know employment's fabulous and loan growth is pretty good at the banks when they report it. Nevertheless, you ignore the bond market at your own peril. I've known that since I started investing in 1979. If you don't watch the bond market, sell. Now, we only have a handful of coronavirus patients in this country. There's just one documented case of person-to-person transmission, and that was from spouse to spouse. The Secretary of Health and Human Services, Alex Azar, was incredibly reassuring when comparing the disease to others he's fought. When Azar was asked about it this morning on Squawk on the Street, he seemed pretty, redoubtable. I mean, there was a sense that maybe we're worrying too much given the precautions that he's taking and his group is. That's the way I kind of felt, even though we gave her all she got when we were asking him questions. But the more I thought about it, the more I felt like perhaps the HHS secretary was too glib. And I stand by that reaction even after the reassuring statement from the World Health Organization. Because the coronavirus has a 2-week incubation period, as you now know, and carriers can spread the disease before it can be detected. Doesn't matter if you put a thermometer to a person's head, they could still be incubating, you never know. We're still allowing thousands of people from China to fly here every day. We haven't stopped those flights, even though there's a chance that the people on them might be sick, or whether they know it or not. Secretary Azar says we're monitoring these travelers, but other countries have taken more drastic action. Russia shut down its border with China. Australia is quarantining their evacuees on an island. A lot of nationally owned airlines are suspending flights. China's imposing a rigid quarantine on more than 50 million of its own people. That's something I got to worry about. If someone dies of this disease here, heaven forbid, if someone dies from this disease in the United States, then I think the averages will get hit again. But that's not the main reason the bond market's freaking out. Here's the real issue. China's the second largest economy in the world. When you start talking about cordoning it off because of healthcare concerns, you better believe that's going to slow down this incredible growth engine. Maybe China GDP's growth slips from the 5 to 7% down to low single digits. Not that they will tell the truth about it, but you can surmise it. When you consider that we still have tariffs on $375 billion worth of Chinese exports, and companies keep pulling out of the country to avoid them, well, you layer on the outbreak, and I think you've got the makings of a very fragile number 2 economy. And any slowdown in China will spread to the rest of the world almost as fast as this illness. Throw in supply disruptions, and you can have an economic disaster, I guess. I mean, I'm not going to deny it. And what would it mean to Nike, Starbucks, to Apple? They sell big there. We know Starbucks has already closed half of its stores in China. Investors keep fleeing the stock in droves, even though I think that's wrong. How can industrials that depend on China, big companies that you've all heard of, DuPont, 3M, recover from their disappointing quarters with this albatross around their neck? What would it mean for all the big car companies that sell into the People's Republic, especially the Germans, but also, of course, GM? And that's the key here. China's not just exporting a virus. It could potentially export a severe slowdown. Europe's their biggest trading partner, and with this major internal quarantine, their growth is going to slow, just when I thought that the banks there were getting their footing. Second problem, there are some cracks in our own economy. One of them most visible is travel, where people are canceling actually, of course, going to Asia. But right now, 6,000 people are stranded on a Carnival cruise ship off the coast of Italy because of a suspected case of the coronavirus. The stock's been weak and it stayed down even after the averages rebounded. I don't see how it can bottom in this environment. It's reasonable to expect that air traffic overall will be curtailed, too, because of passengers worrying that every plane could be a gigantic incubator for this disease. There wouldn't be such a run on face masks. Mine don't come until February 10th. If people were concerned about close quarters, although honestly, the mask probably won't protect you. However, those worries, because everything's got an either or, could be premature. Today, CNBC's own Phil LeBeau was asked if there's any decline in travel in the United States because of the virus, and he answered definitive no. I mean, that's reassuring. But we have to think about what could happen, not what's happening right now. The moment, heaven forbid, again, someone who didn't go to China dies from this disease in America, well, then I'd be worried about the malls, the restaurants, really any gathering place that could become ghost towns. Third, stocks are painting what I would call a mixed picture. On the one hand, slowdown stocks like Mondelez, the snack maker, and Coca-Cola are flying on pretty good numbers. I mean, not blowout, but pretty good. You have to wonder how much of that is to do with recession fears. That's where you go to. You gravitate to those. I think the businesses are good, but the tailwind might be a worldwide slowdown. On the other hand, Amazon just reported after the close, and they totally knocked it out of the park. Stock up more than 200 points to all-time high. Amazon stock says no slowdown. If anything, it says, well, how about an acceleration? The web services was good. I mean, maybe it's acceleration at the expense of some other guys, but it's acceleration. IBM's up too as Ginny Rometty announced she's stepping down as CEO, being replaced by the man who has led their cloud strategy, Arvind Krishna, with Jim Whitehurst, newly bought Red Hat, being named president. They're going all in cloud at IBM, and who can blame them? After both Microsoft and Amazon crushed it in the cloud last night and tonight, respectively. Fourth issue, the commodities. They're rolling over. If not crashing. That's in sync with the bonds. Oil demand is slacking, and oil can't rally in any scenario. Last night, Royal Dutch, one of the better producers, severely disappointed, reduced its buyback. Exxon's down 7% for 2020. 5.4% yield. Never thought I'd see that high yield. No one seems enticed. Freeport McMoran, the giant mineral company, stock's down 13% since the year began. Copper's down 11 straight days. That says recession. Of course, there are also plenty of companies like Amazon that are signaling the opposite. Apple sales are incredibly strong. Same goes for Microsoft and, of course, Tesla. More on that later. But the economically sensitive semiconductor plays like Micron, Skyworks, they've been rolling over. Had maybe a good number from Compadre Western Digital reverses those declines. That happened about an hour ago. Now, here's the truth about these slowdown fears. Only a handful of companies have really reported weaker quarters. Most have reported good. Some have reported excellent. If we get the coronavirus under control, or we just get some certainty that China's got it contained, or even that the wave has peaked, well, then you could see an extension of today's magnificent late afternoon rally. So I think it would be a mistake to do much more than a reposition out of oil and oil-related stocks, because I think they are impaired. I'm betting we can get through this with only a few nicks, perhaps accentuated by a Bernie Sanders win in Iowa. That could scare people because Bernie's proudly anti-wealth, and that's not great for the stock market. But we're going to get it under control. I feel confident. But let me just give you some perspective, a little off the radar screen. When my wife Lisa was flying back from Krakow in Poland after attending the funeral of a good friend, on her plane there were literally dozens of Holocaust survivors and their families, specifically Auschwitz survivors, who were there to commemorate the 75th anniversary of the Nazi concentration camp's liberation. She talked to many of the survivors and their families, including a woman who was literally born there in the camp December of 1944, yet hidden underneath some paper, baby, who lived a reminder of a real triumph. I think it puts everything in perspective. Bottom line, I think we can sell off again if we get more bad news on the coronavirus front. Again, a death here in the U.S. would hurt the stock market, but the earnings are looking good. And in the scheme of things, maybe the outbreak is not the end of the world. One bit of good news about the coronavirus, and we could have a real run. But we need that news before we can get real aggressive. Charlie in Vermont. Charlie.
Yes. Hi, a huge booyah to you, Jim.
Right back at you.
I have been listening to you for over 10 years and a first-time caller, also a member of the Action Alerts Club.
Yes, the club.
Thank you, Jim.
Thank you. Yeah, the club. We got some good ideas. Go ahead. I'm sorry.
Jim. Thank you for all you have done for me and my family, and especially for my young grandchildren.
There you go.
I have made lots and lots of money from you, Jim.
Thank you.
Listening to you, of course. And my question is about Marvell Technologies,
right.
MRVL.
Yeah, okay, so I said in my video today, Catherine Ross asked me, it's my some videos I do for Action Alerts, that, look, the stock's going to come down. It just soared to 28. It's been a wild one. It goes up, down, but ultimately it's going to be up big. So just hold on, and if it goes below 24, I want you to buy as aggressively as you can. Let's go. It's a great 5G play. Let's go to Rod in New York. Rod.
Hey, Jim. How you doing?
I am good. I just got off the phone with Charlie in Vermont. He was so complimentary. I'm soaring right now. What do you got?
Okay. I have a stake in Twilio, and earnings are coming out next week.
Yes.
With so much competition and a juggernaut like Microsoft in the cloud business, is that something to worry about? Are we still jazzed on Twilio?
I would say they're complementary. I mean, I learned to code out of Twilio. Charitable Trust has a position in it. I will candidly admit that last interchange we had with Twilio with Jeff Lawson was a bad one, if you remember. But he came on the show and said, listen, the accounting issue is not going to happen again and business is good. This is it. This man has put his neck on the line. And I'm going with Jeff. But I guess mine could get cut off, too, if he doesn't do it right. All right, listen up. I know you're scared of a slowdown because of the coronavirus. But I think we're going to get through this, you and me, with only just a few nicks. And let's keep everything in perspective. Remember the story about my wife. On Mint Money Tonight, this is where the love of the game and making money intersect. I'm checking out stocks that can serve as your portfolio's tight ends. And no, it's not Zach Ertz. Then, I'm dissecting Tesla's blowout quarter and getting to the bottom of what doomed the shorts fast and furious style. And Texas Capital Independent Bank are merging to create a super regional. It is so cheap. Well, why don't you listen to both of them and you'll know. Stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.